Welcome back to the Daily Finance Podcast. I'm Alex Thompson, and I'm joined as always by my co-host Sarah Chen. Today is Friday, September 26th, 2025, and we're wrapping up what has been quite an eventful week in the markets.
That's right, Alex, and what a week it's been. We're seeing some interesting divergence in the markets today after those fresh highs we discussed in yesterday's episode. The S&P 500 is continuing its upward march, but we're seeing some real rotation happening beneath the surface, particularly in tech stocks.
Absolutely, Sarah. Today we're going to dive deep into what's driving this market action, take a look at some significant moves in individual stocks, check in on the crypto markets, and analyze some major news that could shape where we're headed next week. We've got the Financial Times reporting on continued economic optimism, and Bloomberg highlighting the tech sector's leadership in today's rally.
Plus, we'll be connecting the dots from our previous episodes this week. Remember, on Tuesday we talked about those mixed signals from tech giants, and yesterday we covered how markets hit fresh highs as tech momentum was building. Well, today's action is really telling us a story about how that momentum is evolving.
Let's jump right into the numbers, Sarah, because there's a lot to unpack here.
The headline number that everyone's looking at is the SPDR S&P 500 ETF, ticker SPY, closing at $450.25, up $2.35 for the day. That's a gain of 0.52%, which might not sound like much, but it represents another all-time high for this benchmark.
And Sarah, when we put this in context with what we've seen this week, we're talking about a market that just keeps finding reasons to push higher. The interesting thing is that this isn't being driven by broad-based enthusiasm across all sectors. We're seeing some real selectivity here.
Exactly, Alex, and nowhere is that more evident than when we look at individual stock performance. Take Google's parent company Alphabet, trading under ticker GOOGL. The stock closed at $142.30, and here's the kicker. It was up $3.45, representing a gain of 2.48%.
That's a significant single-day move for a company of Alphabet's size, Sarah. We're talking about a stock that added roughly $25 billion in market capitalization in just one trading session. Now, while we don't have specific news driving this move in our reports today, this kind of action typically signals either institutional accumulation or perhaps anticipation of positive developments.
And then we have the flip side of that coin, Alex, with Apple showing some weakness. The stock closed at $185.75, but it was down $1.20 for the day, representing a decline of 0.64%.
Now, Sarah, this Apple move is particularly interesting when we consider the broader context. Here we have the S&P reaching new highs, we have Google surging over 2%, but Apple, which is still one of the largest components of these major indices, is actually pulling back.
That's a great observation, Alex, and it really speaks to the health of this market rally that we can see the indices pushing higher even when some of the megacap names are having off days. It suggests there's breadth to this rally that goes beyond just a handful of stocks.
Absolutely, and when we think about market sentiment, the Financial Times is reporting on what they're calling continued economic optimism. This isn't just about individual company performance. There seems to be a broader narrative about economic recovery that's supporting these market levels.
The Bloomberg report we're seeing today specifically highlights how technology companies are showing strong performance in today's trading session. Now, when they say that, they're clearly looking at names like Google, but they're probably also seeing strength in other parts of the tech complex that aren't captured in our main data points today.
Let's shift gears and talk about the crypto markets, Sarah, because we're seeing some interesting action there as well.
Bitcoin is sitting at $109,399, and it's actually down 0.34% over the past 24 hours. So we're seeing a little bit of weakness in the flagship cryptocurrency.
That Bitcoin price level is still remarkable when we step back and think about it, Sarah. We're talking about a cryptocurrency that's trading above $100,000, and a decline of less than 0.5% is barely registering as news. That tells us something about how this market has matured.
Ethereum is showing more strength, Alex. It's trading at $4,017.33, up 1.83% over the past day. So we're seeing some divergence within the crypto space, with Ethereum outperforming Bitcoin.
And then we have Binance Coin, which is trading at $957.50, up 0.24%. so modest gains there but still positive territory.
What's interesting about the crypto action today, Alex, is that it's relatively muted compared to what we've been seeing in traditional markets. Usually, when we see strong risk-on sentiment in stocks, we might expect to see more dramatic moves in crypto. The fact that Bitcoin is slightly negative while the S&P is hitting new highs suggests maybe some rotation out of digital assets and into traditional risk assets.
That's a fascinating point, Sarah, and it raises questions about how these markets are correlated as we move forward. Are we seeing crypto mature to the point where it's becoming less correlated with traditional risk assets, or is this just a temporary divergence?
I think it's too early to call it a permanent shift, but we are seeing periods where crypto moves independently of traditional markets more often than we used to. This could be a sign of maturation in the digital asset space.
Now, let's dive deeper into what's really driving today's market action, Sarah. The Financial Times headline about stock markets reaching new highs amid economic optimism is interesting because it suggests this isn't just about technical momentum or short-term trading. There's a fundamental story here.
Right, and when we connect this to what we discussed in our previous episodes this week, we're starting to see a clearer picture emerge. On Tuesday, we talked about mixed signals from tech giants. Yesterday, we discussed how markets were hitting fresh highs as tech momentum was building. Today, we're seeing that momentum continue, but with more selectivity.
The selectivity aspect is crucial, Sarah. The fact that Google can surge nearly 2.5% while Apple retreats suggests that investors are being very discerning about which companies they want to own at these levels.
And that discernment could be based on several factors, Alex. It could be about growth prospects, it could be about valuation, it could be about company-specific fundamentals, or it could be about positioning for what investors expect to happen in the fourth quarter of 2025.
Speaking of positioning, Sarah, let's think about what this means for different types of investors. If you're someone who owns broad market index funds, today was a good day. The SPY being up over 0.5% means your portfolio likely gained value.
But if you're a stock picker, Alex, today really reinforced the importance of being selective. The spread between Google's performance and Apple's performance was over 3 percentage points. In a single day, that's the difference between a great day and a disappointing day for your portfolio.
And that brings us to a broader theme we've been discussing throughout the week, the importance of diversification, but also the importance of understanding what you own and why you own it.
Exactly, and when we look at the sector rotation that seems to be happening, it's clear that not all tech stocks are being treated equally. The Bloomberg report specifically mentions tech stocks leading the market rally, but as we can see from today's data, that leadership is concentrated in certain names.
Let's talk about what this might mean for next week, Sarah. We're heading into the final trading days of September, which means we're also getting close to the end of the third quarter of 2025.
Quarter-end dynamics can be really important, Alex. We often see portfolio rebalancing, we see institutional investors making final adjustments to their holdings, and we can see some volatility as fund managers position for the final quarter of the year.
And with the S&P at these levels, there's going to be a lot of focus on whether this momentum can continue into the fourth quarter. The economic optimism that the Financial Times is reporting on will be tested by upcoming economic data, earnings reports, and any geopolitical developments.
One thing that's worth noting, Alex, is that today's market action happened on what was likely decent volume, given that we're seeing such clear moves in individual names like Google and Apple. This suggests genuine conviction behind these moves, not just low-volume drift.
That's a great point, Sarah. When we see meaningful moves in large-cap stocks on decent volume, it typically signals that institutional investors are making real allocation decisions, not just retail traders pushing prices around.
And speaking of institutional investors, they're likely looking at the same data we are and making similar observations about the selectivity in today's market. The fact that the overall market can reach new highs while showing such divergence in individual stock performance is something that professional money managers are definitely taking note of.
Let's think about risk management for a moment, Sarah. If you're an investor looking at today's action, what are some of the key takeaways for managing portfolio risk?
Well, first, today reinforces that even in a strong market environment, individual stock risk remains significant. Apple's decline while the broader market rallied shows that company-specific factors can still override broad market trends.
Second, the crypto market's relative stability compared to the stock market's new highs suggests that correlations between asset classes can shift, which is important for portfolio diversification strategies.
And third, the continued economic optimism that we're seeing reported needs to be balanced against the reality that we're at high market levels. New highs are exciting, but they also mean there's more room to fall if sentiment shifts.
That's exactly right, Sarah. And as we think about the bigger picture, today's action fits into a broader narrative about market resilience. Despite various challenges and uncertainties, we continue to see investors willing to push major indices to new highs.
But that resilience is being expressed through selectivity, Alex. It's not blind optimism, it's targeted enthusiasm for specific companies and sectors while being more cautious about others.
And that selectivity might actually be a healthy sign for the market's sustainability. When investors are being discerning, it suggests they're thinking about fundamentals and not just following momentum blindly.
Looking ahead to next week, Alex, there are several things investors should be watching. First, any follow-through on today's moves in names like Google and Apple. Was today's action the start of a new trend or just a single-day divergence?
Second, we'll want to see if the broader market can maintain these new high levels or if we see some consolidation after this week's gains.
Third, any updates on the economic data that's supporting the optimism the Financial Times reported on. Consumer confidence, employment data, and other economic indicators will be key to sustaining this rally.
And finally, Sarah, we'll be watching for any developments in the crypto space that might explain why digital assets are moving somewhat independently of traditional risk assets.
Before we wrap up, Alex, let's give our listeners some practical takeaways from today's discussion.
First, if you're a long-term investor, today's action reinforces the importance of staying diversified across different companies and sectors. Even within the tech sector, we're seeing significant performance differences.
Second, new market highs are exciting, but they're also a good time to review your portfolio allocation and make sure you're comfortable with your risk exposure.
Third, the divergence we're seeing between stocks and crypto, and even within the stock market itself, suggests that asset class and individual security selection are becoming increasingly important.
And finally, the economic optimism driving today's gains needs to be monitored closely. Market sentiment can change quickly, so staying informed about economic developments will be crucial for navigating the weeks ahead.
That wraps up our analysis for today, Friday, September 26th. We've seen the S&P reach new highs, Google surge while Apple retreats, and crypto markets showing their own distinct patterns.
Next week, we'll be watching to see how these trends develop and what new opportunities and challenges emerge in the markets. Remember to subscribe to the Daily Finance Podcast if you haven't already, and we'll be back on Monday with fresh analysis and insights.
Thanks for joining us today, and have a great weekend, everyone.
We'll see you next week for more Daily Finance Podcast coverage.